Welcome to Dealmakers and Fakers, the podcast for founders, operators, and investors obsessed with raising capital. I am Niclas, managing partner of spectup. We have helped companies raise over 120 million US dollars, and capital markets are what I live and breathe. But this show isn't about theory, it's about the people who actually got the wire, from real deal makers and maybe a few fakers. In each episode, I sit down with founders, executives, fund managers, and VCs to break down how they really raised the money. The wins, the screw-ups, the red flags, and the deals that almost died. So let's get into today's episode. All right, perfect. So, Nick, thank you so much for joining this episode today. I'm actually super excited that you are here. I did like a lot of research about you and also your company. But before we start into the content, maybe you can give us like a brief background about who you are, what you do, and then everyone knows everything.
My name is Nick Kanopoulos. I'm based here in Greece now. My background is in electrical engineering. I used to live in the US, and after I got my graduate studies done at Duke University, North Carolina, then I started a company. My background was in semiconductors. After 31 years in the US, started Brite Solar. So what we do now is we have a nanomaterials company that develops semi-transparent solar panels for applications in agriculture. The UN projects the world's population to increase to 9.7 billion by 2050. In order to feed this many people, we have to increase agricultural production by about 70% and 14% of energy, most of it based on fossil fuels, and therefore impacts climate change, which in turn impacts agricultural yield. And we thought that if we are able to use the same land to both produce farm products and energy at the same time while sequestering rainwater and using it in precise irrigation and reducing the amount of water required to cultivate a product, then we will have an impact. That's why we came up with the idea of doing transparent solar panels, where the transparency is adapted to the location of installation and the crop under the panel, be able to do the energy production, the crop production, and the rainwater sequestration and reuse all on the same location. Now, our panels are unique, and the uniqueness is that besides the fact that we make the panel based on a specific project, therefore we adapt the panel characteristics to the farming characteristics of the installation and the crop. We also nano-coat the panels with materials we have invented and patented that absorb UV light. We use light energy that it is not used by plants, or it's harmful to plants, and transform it to photosynthetically active energy. The effect of that is the accelerated plant growth and better quality of the plant product. So that's in a nutshell. We developed the technology, and last year, the fourth quarter of last year, we also completed the manufacturing facility in Patras, Greece.
That's great. I actually saw that also when I did my research. So congrats on that still.
Yeah.
That's really amazing. I have a question mainly because of your movement from the US to Greece. I think this is very interesting because at this point I see so many comparisons between startup founders who say we stay in the US and build our business there because we get like a better valuation, for example. We can raise maybe even more money. Like at this point where you moved to Greece, did you already have this business in mind that you know that you will start it from Greece?
No.
Okay.
The move to Greece was strictly for family reasons.
Okay, got it.
My mother was sick and I came back to help the family, but it was not because I wanted to build a startup company in Greece, because at that time anyway, it was going through a financial crisis, was completely uninvestable. It was a crazy thing to do, to come to Greece and try to start a business. But even now, when the circumstances are much better and Greece is doing very well, as an economy and as a country. Environment for a startup company is much more difficult compared to other European countries, and even more difficult compared to the US.
That makes sense, but thank you for clarifying because I see it very similar. So most of our clients are also mainly in the US, and they are also there because they can raise more money because it's easier. But actually, we also work closely together now with a Greece company, and they also got funded now, but also from Greek VCs. So I think this might be still the way. If you then go maybe to German VCs, but from Greece, it might be sometimes a challenge to get like their attention. So
It
I just
is.
wanted to hear your opinion about that.
It is. I agree. But having said that, if you are able to make it here, it is cheaper to get the value of a company at some point here than it would be in the US or somewhere else in Europe. So what we plan to do is we plan to do the reverse. We didn't find the company in the US or Europe, but we plan to find the company actually in the US, do a reverse merger, and then exit in the US, having established with low cost value for the company here in Greece.
Yeah, that's clever. Nick, now I'm super curious because we spoke already a little bit about the beginning. So you moved to Greece and then you somehow developed this idea and found out more about the problem. But how did you then start Brite Solar in the beginning? Like how do you finance, for example, the first chapter? Because I can imagine that especially the beginning was also quite money intensive, that you have to invest like a lot of money. So how did this work at this time?
Yeah, as I told you, when I started Brite Solar, before starting Brite Solar, I was working for Applied Materials. Applied Materials is a US based company that makes capital equipment primarily for semiconductor manufacturing, but also has a division that does equipment for solar cell and panel manufacturing. So I was in the solar division and we're doing turnkey solutions for thin film solar panels globally. After that division, after they stopped offering a turnkey solution, I decided to move on. And where the idea of doing the transparent solar came to my mind because I was already in the solar market and in the solar business. What you say is very correct. When I started the company, Greece was in a very difficult financial position. Our 10-year bond was running at over 18% yield. So no investor in the right mind would invest in a startup company in Greece. That forced me to be the seed investor myself. So I'm the founder, but also the seed investor in the company. And I invested in 2 tranches, my own money, about 1.2 million. And that's what started the company. Then we leveraged financing from R&D contracts from different sources, either European sources, but also Greek sources. And we used the R&D contract money in order to develop the product itself. And when we were in a position to essentially go to market and produce the product, we raised Series A of 8.6 million euro. And that came from 50% from the EIC Fund, which is the largest technology fund in Europe, and the rest of it from Greek VCs, basically.
That's very interesting. And the money that you then received for the research and development, like how much was that in total?
About 10 million.
Okay. So like that means like you spent like around 12 million to basically research and develop like your products. And then until the point where you were done with that, you could basically go to Series A investors and show them now is the time we can scale the product, we have it ready, and we can grow the company.
Yeah, because the peculiarity about this product, because of the nano coating materials, is that there's not a manufacturing line somewhere else in the world where I can go and manufacture under contract. I can do the design of the semi-transparent panel without the coating. I can find, and I have partners that helped us do that in the beginning, but a coated panel I couldn't do anywhere else. So we decided, okay, we have to do our own manufacturing line in order to be able to offer the complete technology for the panel. And that's what prompted the building of the factory and the Series A. So the seed funding and the R&D contract money were used to develop the product, bring it to the point that it was validated both in terms of in the field. It was installed without the coating, again, over different crops in different geographical positions. We studied the results. The results were very positive. And separately, we did experiments with the coating. We saw the great benefits of the coating to the plant growth. And then we combined the two in a manufacturing line that we built here in Patras. In terms of product development, the money from R&D contracts was also used to develop a second product, which, however, is not in the manufacturing stage yet. We have to build a pilot line for that one too. So we have a second product developed with the R&D investment. However, the second product is not in production yet because we have to build a production line for that.
Of course.
Yeah.
Thank you for clarifying, but that sounds very interesting. That sounds actually quite groundbreaking as well. So that's amazing. If we now look again at the grants that you received, I think I saw that you also did receive a grant from the European Innovation Council, right?
Right. Not only a grant, it was what they call it blended finance, which means that a grant for the R&D portion and then equity for, 50% of our Series A comes from EIC.
Okay. And okay, so that means in the moment where you did the Series A, the European Innovation Council, they already knew a lot about your company because you already had contact from the previous grants you received.
Correct.
Okay. And how did the grant application process work for you? Did the European Innovation Council know you already at that point, or okay, so you applied over their platform to receive grants?
Yeah, I applied over the platform to receive essentially blended finance. Part of the finance was grant and part of the finance was equity. Of course, the equity part has a condition that you have to match this equity with an equal amount of money in order to access it. Okay? This is a very competitive process. The EIC is a very competitive program. The rate of success is less than 5%. And in fact, I was the first Greek company to receive EIC funding. And since then, meaning the 2021 timeframe, there is only another 3 companies from Greece. So it's not really a very widely accessible program because of its competitiveness Europe-wide. So the process was fairly, I would say, complicated and intense in terms of the proposal writing. And then it has also a step of an interview where the interviewers are business people. So you don't only have to present the technology, but also the business case for the technology, and also demonstrate that this technology can be actually manufactured at scale and has a market for it. It is competitive price-wise and so forth.
That's very interesting. And can you still remember, Nick, what type of questions you got asked from the people who were in the room? Was it mainly about scalability then, or was it really a mix of different things?
It was questions about because some of these people are also investors, work for VC funds. So there were questions about, first of all, financial questions. There were market questions, how you're going to get market share, what will prevent the Chinese company to come and make it half your cost? There were questions about, patents. There were questions about freedom to operate. It's not only if you have the patents to protect yourself, but what about if you step on somebody else's patent and then you bring the product to the market and they sue you? Then what? There were also European sensitive questions, gender balance in the company, for example. What else? Oh, supply chain questions, very, very significant. Okay. How are you going to manage? I mean, startup, a small company, how are you going to manage your supply chain? Because you need raw materials in order to build anything. So how do you manage that?
That is very interesting because like we also work from time to time with the deep tech founders, and I think especially deep tech industry is of course different compared to like another software product. So the type of questions you get asked from investors are totally different. So that's why I asked you now. I think like this type of advice is very tangible, so that hopefully other deep tech founders can use that knowledge from you now and prepare.
Okay, I think these questions are more relevant to people who build hardware and they need raw materials to build the end product. If you do software development or if you do, let's say, a platform, you work on a platform, then these questions are probably not relevant. Other questions are relevant in that case. But when you're dealing with manufacturing something, then these questions are really key because it can make or break the company.
Yeah, I agree. And I'm again super curious now because you mentioned the one question about China and how you can basically compete with them in the pricing. Can you share like your answer that you then told to the European Innovation Council?
Yeah, there are two angles to that answer. One is that, first of all, the patents we filed in China. They're Chinese patents, not international patents in China, because they're easier to defend and enforce using a Chinese patent legal firm. The second thing is that our panel is unique because of the nanomaterials we have that enhance essentially the light energy for the plant, something that Chinese panel manufacturers do not have. The third is that our line has been built from the beginning with the idea of making agrovoltaic panels, not regular panels that will change to make them agrovoltaic. And what that means is that we can go from one panel transparency to different panel transparency very quickly without taking the line down for an extended period of time. For a regular panel manufacturer to make one panel with X number of solar cells, but then when we need to increase the transparency, this has to be Y, where Y is less than X. That transition takes time and effort. It cannot be done automatically. But we built this line specifically with this feature in mind. And also the line is extremely automated.
Oh, wow.
Yeah.
Okay. Understood. That's great. That's great. Thank you for sharing that, Nick. I actually would like to move now a little bit forward in the story and speak about your Series A round. Because one question that I also hear very often is, when do you actually know that you are ready for the next round? And so I would like to know, were there like any proof points for you where you then said, okay, now we are really ready to raise the Series A round, or how did you decide that?
I mean, I don't know if there is an algorithmic, let's say, way to determine that now I'm ready for Series A. For me, it was, I need money to build a factory. This money cannot become from my operations, and I need the bulk of money, all of it at the same time. Therefore, I need to reach Series A.
Money that you raised for the Series A, you mainly allocated that then to build this new factory that you
all of it
finalized last. All of it. Okay.
And even some more, because right now we are trying to raise Series A plus, because all of the money plus a couple of million more, it was allocated to building our factory.
Okay. Yeah, that makes sense. And also good to know that you are now raising a Series A plus. So maybe we have an investor who is very interested in deep tech or to speak to you. So we will also link all your channels into the podcast episode. They can then reach out to you directly.
Absolutely, yeah. Series A plus, we are raising 3 million. The company will be profitable next year. If there are interested investors, we'll be happy to talk to them.
Amazing. Do you have, by the way, in the moment, some target countries? I think you just mentioned Europe. Europe is your focus, but are there like some countries where you currently already see more interest or attention?
Right. We have, first of all, I want to tell you that we have installed our product in over 15 countries and over various crops and diverse geographical environments. So northern countries like, for example, Germany, but also Canary Islands or Singapore or Indonesia.
Yeah.
The countries we see, Europe is our main focus right now. We want to develop the US further because it's a large market, but right now, politically speaking, there are allergies with renewable energy. One country that outside of Europe that has a great potential for us is India. The reason for that is the government of India announced the deployment of 10 gigawatts of agri-PV by 2030. So that's a large number.
Of course. And maybe if things change in the US again, then the US might be also more relevant again.
Yes, we hope it will. We hope it will. Having said that, we see quite a bit of movement in South America as well. We haven't had any installations there yet, but we see a lot of interest, especially for grape farmers in Chile, Peru, and Argentina.
That's great. I think actually the timing right now in general is very good. And of course, like it will become even more better over time. So it's great that you have now your factory and you can basically use that momentum then to go into all these countries. So I hope this will work out, but I'm pretty sure. I have a couple of more questions regarding the Series A.
Yes.
Like, did the European Innovation Council somehow support you during the Series A process, like with introductions, or like did they have like any specific role in the process?
Introductions to customers?
Investors, more like investors, like other investors, for example.
The EIC Fund directly doesn't offer this kind of support or service. However, there are companies who have contracts with EIC. Task is to help EIC awardees to access investors. However, these are for all EIC participants participating in the program, and it is very wide. It goes from telecommunications to food production to medicine. So it is helpful, but it's not focused enough to have, let's say, an impactful result in a short period of time.
Yeah, that makes sense. And do you still remember, was there like a low point in the fundraising journey where you, let's say, mentally struggling because like fundraising is extremely difficult? So was the process for you smooth, or did you also had like some obstacles?
No, the low point was always defending the valuation because, especially being in Greece, valuations are even lower than Europe, and we were not willing to, raise money at very low valuations. So we had to defend that. That was the struggling point, and of course, the other low point in the whole process is when you go to Greek VCs and you tell them about manufacturing and hardware and stuff like that, they get completely off. They prefer soft technology companies like AI and things like that, because in manufacturing they see competitive issues. How are you going to be able to do it? In Europe, they preach manufacturing to bring manufacturing here and jobs and have some essentially industry, develop the industry more. When it comes to funding companies that are engaged in manufacturing, there is a huge obstacle in the middle. I mean, if a company is early stage, you can find a lot of funds here that will invest in that. If the company is making, let's say, above 10, 20 million in revenue, you can also find funds to fund. But if you are in the middle and you need to build a factory and then start making revenue, then that's the difficult part.
That's interesting. So I guess we need more capital partners, more capital providers who focus exactly on
the scale.
Yeah, exactly. Yeah.
Especially here. In Europe, of course, you don't have this problem, but here in Greece, you do. In a big way.
I think in Europe, in Germany in the moment, it's often about pre-seed stage. So most of the investors I speak to, they say, yeah, interesting opportunity, but we need to see more traction. So every investor at this point, they want more proof that things are working. So I think this could be like a difference to Greece then.
Yeah.
Nick, thank you so much for all the information. That's super helpful. I actually have just a couple of quick fire questions, so you can reply them quick if possible.
Yes.
So one question would be, did you receive one investor question that you secretly love to get? Like a topic, for example, that you kind of like when investors ask you this?
No.
Okay. Is there like a red flag question for you? So if an investor asks you something where you think, oh, this is not my type of investor.
Question that it's frustrating for me, or it was at that time, was that investors were asking for revenue for a product that we could manufacture. How do you have revenue when you cannot make the product? So it's frustrating, but not like I dislike the question. Of course, I explain.
Of course. Okay. And do you think there is like one underweighted metric or slide in a climate tech hardware deck from your perspective?
Underweight, you said?
Yeah, like underweighted, like a slide that might be very important, but many people maybe miss this one. So could be a metric or could be a slide in a pitch deck that is very important from your perspective.
Yes. So I have a slide there that shows the last 4 years in comparable companies in Europe, invested by European investors, what is the normalized deal over revenue ratio for the investment? Because they tell me, okay, the valuation, maybe the valuation is high and this and that. That's okay. Look what other investors have done in Europe. Different European countries, different companies who do something similar. They may make, for example, panels for rooftops. They may make panels that are very light. So there, the deal to revenue ratio is 18.1 in terms of valuation. So I point out to them and I say, okay, so the valuation of our company has to be 18 times revenue. So the valuation in closed Series A was less than that. Therefore, we are not high valuation or lower valuation. But this slide, they pass very quickly. You know, they don't want to discuss that slide. Yeah,
very nice. I like that idea. Okay, amazing, Nick. Thank you so much. Maybe to finalize like this episode, like, is there any advice for founders who raise capital for capex heavy or hardware heavy climate tech in Europe? Like, what would you give them as advice from your perspective after raising so much money?
I would say develop the company and the product up to and including validation. See if you can manufacture the product using OEM manufacturing somewhere. If you cannot, then go for Series A. And the name of the game is don't give up. So you persevere until you raise the money. Another thing that it is very important is the more sales or the more traction you have, the easier to raise the money. Yeah. The less traction you have, the more difficult it will be to raise the money.
All right. Nick, thank you so much for joining this episode. It was really a pleasure to meet you as well. And let's stay in contact. And to everyone who is listening, reach out to Nick if you have questions about his business or if you may want to invest into the next round, and subscribe to my podcast, please. Thank you. Goodbye. That was today's episode of Deal Makers and Fakers. If you took away even one thing that you can use for your own ways, do 2 things for me. Follow the show so you don't miss the next deal story, and share this episode with a founder or investor who needs to hear it. If you are gearing up for a serious race and want support with your decks, with your numbers, with your strategy or investor outreach, you can find me and the spectup team at spectup.com or on LinkedIn. Thank you so much for listening. And remember, in capital raising, everyone sees the headline, but very few really see the real deal. See you in the next episode.